Hello guys, so I'll be talking about supply and demand. Supply and demand is more of like your regular support and resistance concept, but in this case, supply occur in the downtrend, and in an uptrend, demand occur there. Now, supply is equivalent to like your selling zone, whereas demand is equivalent to like your buying zone. Now, the reason why you should look for this supply and demand zone is because that's where the big money, the smart money, take their trades. And if you follow that concept, you make a whole lot of money following the smart money concept. Now, because smart money, they take their trades patiently, they wait for their setups patiently, and make huge movements. So if you're able to like jump on with their move, then you'll be making a whole lot of money. So supply is just like your resistance level, whereas your demand zone is like your support level. So now, first thing I will identify the structure of the market, and the structure of the market is an uptrend, obviously. So we are having series of higher highs, having series, having series of higher highs, higher low, higher high, higher low, higher high, higher low, then higher high. So this is what this is an uptrend. This is an uptrend. Now what am I looking for in an uptrend? I'm looking for my demand zone, right? My demand zone is just like my order block. Now my demand zone is an area where the candle before the huge movement. Now if you observe this area, we have a candle before this huge movement to the outside, right? So this is a demand zone actually. On my forward time frame, it's a demand zone. But then I'm not taking that level as a demand zone because it's already mitigated. You can see this level here came and tap into it, so I'm not taking it as a demand zone because that level has already been tested. Now I'll look for other demand zone in my recent market. Now here is a possible demand zone because it's a possible demand zone. Now mark it out. It's a possible demand zone because we have an imbalance here. These huge moves you are seeing, they are an imbalance, and we also have a fair value gap. That's a gap between this level. We have a fair value gap between that level. Now this is a demand zone and the 4 hour time frame. Now there is no any other demand zone here. Now this is the only demand zone we can possibly find on the 4 hour time frame now. So on my 2 hour time frame, let's look for other demand zone areas. If we can find another demand zone area. Now here we can find a demand zone here on my 2 hour time frame. You can see this is a demand zone which is already tapped into, but yeah, that's where the market is currently is. So it's a demand zone and it's valid. So we don't know, maybe the market is going to respect that level. I don't know, maybe the market is going to respect the level and begin to reverse. We may end up seeing something like this, and then boom to the outside. So, and we may also end up seeing something like this. Market may end up pushing below to this demand or demand zone and end up going back. So why should you look for these demand zones or supply zones? That's where the big market is. That's where smart money put their money. Yeah, the big guys, the banks, all the smart money, they mostly look for the demands or supply zones. And how do you identify them? As I said, you identify them by knowing where there is a big shift in the market. You see big move to the upside, then look for your area of what the last candlestick before that big move should be your what your demand zone. Just mark it out you get your demand zone. Now here too, you can see we have a big move from here. I also have a big move down here. Then this should be our supply zone. Now this area should be our what? Supply zone. The last candlestick before the move should be our supply zone. So let's mark out another demand zone. Now this is a demand zone also, but market didn't test this demand zone back. Now this is a 2-hour demand zone. I'm just trying to like show you guys how to mark out your demand zone. It's like a 2-hour demand zone. Markets was supposed to like test in, like come back, test it, then begin to what? Go back. But there's what we call efficiency and inefficiency. Efficiency in the sense that market, well, let's say something like this, then we have something like this. Now this market is what we call an efficient market. Why? Because this is our demand zone, right? Market came back and tapped into this demand zone. Then we call it what? An efficient market. And then inefficient in the sense that let's say we have something like this. So we have so many demand zones on this area, but market didn't test them. Like market didn't come back to test them. This is a demand zone also. You see, market's supposed to like come back and test them, but market didn't test them, and it's going up. And eventually you may end up seeing the market crashing all the way down just to test the demand zone. So this is what we call an inefficient market, because the demand zone is not being tested. Market keep pushing to the upside. So this is an inefficient market. Now, how do you trade your demand zone, your demand and supply zone? Now, to trade these levels, you mark out your demand zone on the higher time frame, let's say 4-hour or 2-hour time frame. Then you come down to your what? To your 30 minutes or your entry time frame. Look for when these levels are being tapped into. When they are tapped into, you look for confirmation, either a shift of character, a market structural shift. Just like here now, I'll be expecting market to make a structural shift to the upside. Now currently you can see the market is in a downtrend, like it's coming down. So I'm expecting market to push above, let's say here, or maybe somewhere around here. I'll move on to a lower time frame more, let's say 15 minute. Yeah, then I'll expect market to push above this level. If markets make a turn and push beyond this level here and give me something like this, then I'll be expecting my demand zone around this area, or maybe here, to push back. Then I'll get my entry and then ride with the what? With the smart money. The smart money, moving with the smart money is your best decision, and most of the times you have a win rate of, let's say, 70%. Yeah, it's actually crazy, because smart money at the best, and the concept of SMC is actually logical, not like the support and resistance that you just trade. Like, to me, I don't know, it doesn't make any sense. That support and resistance concept doesn't make sense to me, though there are many people that profit with that. It doesn't work for me, guys. So now we've identified our demand, and now this is a setup I'm looking for. So if you're trading gold, look for a setup like this, and if we don't get something like this, you may end up pushed down to my recent demand that I just deleted. Then it will begin to also push back up. So guys, please don't forget to subscribe and share this video, or follow if you're watching from TikTok, wherever you're watching from. Don't forget to follow, subscribe, and yeah, you can join my free Telegram community, WhatsApp community. I'll share the links in the description below. So guys, I'm Amphyfx. Thanks for watching, and see you in my next video, guys. Peace out.